let's get started. My name is Paradise. I'm the senior trader, Remit Trade Academy. So I'll be taking you through today's training. And also, most of you guys have gone through my YouTube channel, which is Remit Trade channel. And then maybe you've been wondering who is speaking. Today at least, you can see my face. And then we are very confident in what we do because we are profitable professional trader. We've been in the market for over 5 years today with a whole lot of expertise. The whole idea behind Remit Trade Academy is to ensure we have successful traders, because we discover that there are a lot of traders out there that are not successful. So we have a method, we have strategies in which you will have to learn and become successful. Because if we are successful and you do the same thing as we are doing, definitely you are going to be successful. That means any laws that we are applying and you apply the same thing in the market, you will definitely get results. So, like I said earlier, I'm Paradise, and then I'll be taking you through the training. And remember, it's going to be a practical section, very practical. I'll be taking you through the Binance platform. I will explain gold and do practical just like that. And you are going to get the very best of the trading. That's the assurance. All right, now at the end of the training, ensure you write down your questions, because I'm going to take your questions one after another. The training is not going to be long. The maximum 40-50 minutes. Then I will give time for Q&A for you to ask me questions. Now you're going to ask me questions on anything as far as cryptocurrency is concerned. Not only that, if you have any question on forex, because we do forex, we train people in forex trading, you can as well ask your question as well. I will answer you. So let's get started. So I will okay, so like I said earlier, this is Remit Trade Academy. This is the home of successful traders. We are very proud of that. This is the home of successful traders. If you want to be successful, join us in this academy. We have access to informations, expertise, and all that. So we are going to take you through a step-by-step guide today on how you can kickstart your cryptocurrency trading journey. So now, if you want to contact us, you can reach us via this WhatsApp line. You can as well call us, and then you can visit our site as well, remittrade.com, and then you can as well email us, remittrade at support@remittrade.com, and all that. Now, I'm going to take you through the Binance Exchange. Now, if you are watching the video on YouTube, because I'm going to upload the video on YouTube, the recorded version, ensure you check in the description below. You will see a Binance link. If you're not registered on Binance, ensure you do your registration via the link below. Now, if you are in the class and you don't have a Binance account, you check in the group. That's a WhatsApp group. You will see a Binance link that I sent there. You just click on it, do your registration, and ensure you do your KYC, your verification.
Hello?
And you do your verification. You do your verification, and then you're going to start trading. Okay, you will start your trading journey. All right, so now Binance is the world leading cryptocurrency, and it has a whole lot of things in place for us. Now, Binance is not just an exchange, but an ecosystem. It's an ecosystem, which means it has a whole lot of stuff in it, which means that on Binance, you don't actually trade. Even though you don't know how to trade, there are other opportunities that you can take advantage of that is very important, and that is what I'm going to show you. So, like I said earlier, please, if you just join the training, ensure you mute yourself. It's very important so that you can have a very serene environment from all our ends. So we can have a serene environment from all our ends. So ensure you mute yourself. Very important. Let's start. Now, if you look at this, the Binance platform, and I'm going to be taking you through a step-by-step guide in it, and then ensure you have the very best of the training. Ensure you have your mute button on, because we don't want noise. So let's get started. Like I said earlier, the Binance platform is more than an exchange. It is an ecosystem. That means it has some other products that you can take advantage of when you are trading. So even if you don't want to actually trade, like go in and out of markets, you can actually participate on the Binance platform. You can actually participate on the Binance. Today, we are going to be looking at trading. So, what is trading? Trading means any activity where you give something to someone in exchange or in return for something else. That's trading. So when you go to your grocery stores to buy something, you've actually traded. When you go to your grocery stores to buy something, you've actually traded. So the financial market, for example, the cryptocurrency market is not an exception. The cryptocurrency market is not an exception when it comes to trading. Either you trade stocks, you trade bonds, you trade forex pairs and options. It's still the same thing. It's still the same thing you are doing when it comes to trading. So that's very, very important. Now, spot trading. What's spot trading? A spot trade, also known as a spot transaction, refers to the purchase or sales of cryptocurrencies, financial instruments, or commodity for instant delivery on the specified spot date. Now, on the cryptocurrency exchange, for example, that of Binance, the rate at which the transaction is based is referred to as the spot exchange. So if you go to the Binance platform, the rate at which you want to take your trade, let's say I go to advanced. So if you go to this platform, you go to trade, you click on advanced. So if I click on advanced, you come here. Now the specified date in which everyone is taking their trade here at instant spot delivery is known as spot trading. So when you're actually taking your trade on the spot, just like when you say something is happening on the spot, so you're actually taking your trade right now, or you can specify a date on which your trade should be executed. Either you're using the limit order or market order or stop limit order or all of that. So that is spot trading. Now, markets and market pair. Now, when we talk about a specific market, we mean where you will see buyer and seller come together to trade a certain asset. That is a market. So in our various places where we find ourselves, we have a particular market where we go to buy something. So in the cryptocurrency space, we also have what we call a market. Now, a market pair, we are talking about if we buy something. When you go to the market, let's say the traditional market setting, when you go to the traditional market setting, you don't buy everything that you see there. There is a specific something you want to buy or some things you want to buy. So in the market pair in cryptocurrency, we are talking about if you want to buy something, what are we paying with? And if we want to sell something, what are we getting in return? That's just very simple. So let's say, for example, you see the Binance platform. Now, this is a market. So you see BNB market. So this is called BNB market because if I click on it, it has BNB all through on the right. If it is BTC market, we have BTC all through on the right. If it is altcoin, under altcoin we have Ethereum market, Ethereum all through on the right. If it is fiat and you choose USDT, USDT all through on the right. Now, don't ask me question about the 3x, 5x. That is somehow advanced when you want to do leverage trading in terms of features and margin. But just know that this is USDT market and you see USDT on the right track. Now, a market pair is this one. You see, when USDT is a pair, NPXS is a pair, BTC USDT is also a pair. So these are various markets and market pairs. You see BNB market, BTC market, alt market, we have USDT market, and we have also the innovative zone, DeFi, and the rest of them here on Binance. So that is market and market pair. So let's say, for example, you have BTC GBP. For example, now this pair BTC GBP is a pair or a market for buying and selling Bitcoin in pound. That means the pair BTC GBP indicate that if you want to buy Bitcoin, you have to pay with pound, And if you want to sell Bitcoin, you will be paid in pound. The same thing for Ethereum ZAR and any other pair you find in the market. Let's say, for example, here I go here and I search for BTC. Remember, it's under BTC market. I search for BTC USDT. You see, it will come up now. If I search for BTC GBP, you see, it will come up here. If I click on it, now I'm now on BTC GBP. This pair means that if I want to buy BTC, I will use GBP in buying it. And if I'm selling my BTC, I will get GBP in return. That's what it means. I will get GBP in return. That's what it means. So you have to get that right. You know the difference between market pair and what's actually going on when you choose a particular pair to trade with in the cryptocurrency market. Now, the knowledge you are getting tonight can be applied in any other market at all and any other exchange as far as cryptocurrency is concerned. Now, types of orders. We have many types of orders in the cryptocurrency market, and tonight we'll be looking at just 4 of them, and I will be very fast in talking about these different types of orders. Number 1, we have market order, we have limit order, stop limit order, and OCO order. Now, a market order is an order you place to buy a particular cryptocurrency asset at the best available market price. What does that mean? Let's say, for example, I want to buy BTC USDT. I want to buy BTC USDT. Okay, I will choose BTC USDT. Okay, since I want market price, the best available market price, I have to use market order. So if you see here, this is the place order, buy, I put it on market. So since I want to use market, it will give me the best available market price. Now, the best available market price in terms of buy is the one you see here. So if I want to buy, they will give me the seller at this point. So what you see here is almost equivalent to what is here. What you see here is almost equivalent to what is here. So this is the best available market price. And this price is what you see on your chart right here. Very, very simple. So I will just go here and I will just indicate, okay, I want to buy $100 worth of USDT, and I will click buy. Once I click buy, you see my order is executed. I buy Bitcoin. So you can also take this as a business, in the sense that if you have people that want to buy Bitcoin, you can buy it for them and ensure you add your transaction fee and any other transaction fee that may cost you plus your gain, and then you can be buying and selling Bitcoin for people just like this. So that is market order buy. Now, if I want to sell my Bitcoin, I can just put it here, and then I will sell my Bitcoin as well. The same thing at market order. So I will just impute the quantity of Bitcoin I want to sell. Let's say, for example, I want to sell 0.0005 Bitcoin. Okay, and I click sell Bitcoin. It has sell Bitcoin for me into USDT. Remember, I buy Bitcoin with USDT and I sell Bitcoin into USDT. Reason because I'm using the BTC USDT pair. I'm using BTC USDT. So you can use this to navigate through anything you want to do on the Binance platform. Now, another type of order that you have to understand is limit order. Now, in limit order, you have to specify your price. You have to say, okay, I want to buy at this price. So that means if price does not come to that very level, your order will not be executed until price comes to the level. So let's say, for example, I want to buy at this point. Let's say this point is, I want to buy Bitcoin at 54,800. So I will come here, remember, buy, and then limit. Then I have to put here the price. This is the price here, so 54,800. So I have to put the price, 54,800. Let's say 54,800. Okay. So let's say this is the price I want to buy my Bitcoin. This is the price I want to buy my Bitcoin. Now, at this price, I've already specified my price. Now, what limit order will do for you, it will help you specify your price. This is the price I want to buy, so that when the market move from here to this point, your order will get executed. So I will just put, let's say I want to buy $200 worth of Bitcoin in USDT. See, this is the equivalent. So I will just click buy. Now, the order will not execute immediately. It will go to the order book, pending for when price will come from here and it will get executed. So I can actually see my order. You see my limit order here at the bottom here. You see open order, one open order, BTC USDT is a limit order to buy Bitcoin at this very price, which is 54,800. So that is limit order. So a limit order is an order to you set to buy a given security or cryptocurrency asset at a specified price. At a specified price. You are the one to specify the price you want to buy, so that when price comes to that level, your order will get, executed. Very, very simple. Very, very simple. So the next one is stop limit order. Stop limit order. Now, in a stop limit order, now the same thing happens to when you want to, limit sell any asset. Let's say, for example, I want to sell Bitcoin with limit order. The same thing. You have to specify your price that you want to sell at limit order, and you place your order. It will be executed. When price comes to that level, you will sell your Bitcoin at that your desirable price. Now, the stop limit order is an order you place in the market so that if the market is going against you, you don't lose much. So the stop limit order is used as a stop loss. It is used as a stop loss in the markets. What does that mean? Let's say, for example, you do your analysis on these very charts, and from your analysis, Bitcoin is supposed to go up. That means from here, Bitcoin is supposed to go up after it breaks this very resistance level. Let's say market breaks this resistance level, Bitcoin is supposed to go up. That's your analysis. But as a trader, now, in this academy, we teach our students a good strategy must have an entry point, an exit, and a good stop loss. So your stop loss must be predetermined before you enter the trade. That is when you are trading. I'm not talking about when you are holding your coin for a very long time. When you're holding your coin for a very long time, there is no need setting a stop loss. You just need to buy the coin at the very possible dip that you can and leave the market to go up for you to, sell in profits. For you to sell in profits. So that's very important. So a stop limit order help you, it help a traders limit its loss. So let's say, for example, you are trading Bitcoin, which is on this pair, BTC USDT pair, and then you are saying market will go up. So you enter here. So you set your stop limit at this point. Now, stop limits have two things. Number one, so if you put a stop limit order, it has a stop, which is the condition for which the market will get to. Then it will trigger as an ordinary stop limit. So let's say, for example, I want to, I want my Bitcoin to get sold off. If market is going against me, listing, I enter here. Remember, I enter at this point. Then I'm to exit at this very point if market go against me. So I have to use a stop limit order for that. So I have to have a stop and then a limit, which means I will come to this point and said, okay, my stop should be 55,500. So I will come to this point and put 55,500. That means if I've already buy Bitcoin, I have 55,500. That is your stop. That is the condition for which price have to go down and reach before an order to sell Bitcoin will be triggered at 55,490. You get the difference now? The stop is very important because it do confuse a whole lot of baby traders, some advanced traders. 55,500 is the condition that should be reached before this order will be placed into the order book. So I can now put the amount of Bitcoin I want to sell, and then I will then click sell. Now, the stop limit is not only used for sell. You can use it to buy a particular cryptocurrency asset, once the condition is reached, the order will be triggered. So I will go ahead and click sell Bitcoin. Now a confirmation will pop up and say if the last price drops to or below 500 USDT, an order to sell this quantity of Bitcoin, which is 0.00222327 Bitcoin at the price of 490 USDT will be placed. So I said confirm. So once I confirm, the order will be placed. So if I scroll down, you will see my order is already in the order book. So once this condition is reached, which is 500, an order to sell will be what? Trigger for me. Very, very simple. Very, very simple. Very, very simple. So this is the trigger condition. Don't follow this one. This was the order limit order we placed. Let me cancel this one. So this is the very one I just placed right now. This is one I placed. So once this condition is reached, an order to buy Bitcoin at this price will be filled. That is how you set your stop limit order. Very, very simple. Very, very simple. So I will go further and cancel this as well. Now, the next one is the stop limit order. I've talked about that. Then we have the OCO. OCO means one cancel the other order. One cancel the other order. Like I said earlier, stay with me to the end of the video. You're going to get something very important when I'm going to go into a little bit of chart analysis. I am a chartist. So I will give you a little bit of chart analysis that you will use, a strategy that you will use to trade, even though you are a beginner, very simple one. So stay with me till the end. So OCO order means one cancel the other order. One cancel the other order. That's what it means. Now, if you want to place an OCO order, you just go here and you click on OCO. Now, OCO order is a two types of order in one. We have this one is the take profits. Then this stop is the normal stop limit that you see here. The normal stop limit is this order stop and the limit. So it helps you take profit and have a stop loss at the same time. So let's say, for example, you have Bitcoin that you want to sell. You've already buy Bitcoin. You have one you want to sell. And you take here as your take profit target. Now, this is your entry. This is your stop loss. Very simple. This is your take profit targets. This is your entry, this is your stop loss. So let's say you've already buy this Bitcoin at this price. Now, you can set an OCO order in the sense that if market move in your favor to this very price, it will automatically sell Bitcoin for you. Even though you are not on the Binance platform, you are not logged into your account. Now, if Bitcoin drop against you, it will sell at loss for you at this point as well. That means if it goes up, it will sell for you in profit. If it goes down, it will sell for you at loss. That means now any of these order that get executed first, any of these one that get executed for, let's say for example, the take profit one, this one get executed, this one will automatically cancel itself. If this one got executed first, this one will automatically cancel itself. That means they are dependent on each other. They are dependent on each other. That's why it's called OCO order. One cancel the other order. So when one is executed, the other one cancel itself. So let's say for example, you place this at the take profit. Let's say the take profit here is 66,600. So you have 66,600. That's the price you want to take profit after buying at this price, which we can take as 59,200. And then this is the stop. So the stop here is the same stop that we take the other time. So we take 500. Then the limit, you have to specify the limits for which the trade will place in the order book, which is 490. Okay, then I have to put the quantity of Bitcoin I want to sell. So I can just put, 30% or thereabouts. And then once I do that, then you see the quantity in USDT, which is about 200 USDT. Then I will now click sell Bitcoin. Once I click sell Bitcoin, my order is executed. Now if I go down, you will see two kinds of orders. here. You see a limit maker order, which is sell, which is the take profits. That if price go to this very area, which is 6,600, an order to sell Bitcoin, this quantity of Bitcoin will be placed for me. Now, if price go against me, this is the price I want to sell, which is the stop. That has the normal stop loss. That has the stop limit order I talked about just some minutes ago. So this is the price it will stop me out. Then this is the trigger condition that have to be met before this quantity will be placed in the order book at this very price. It's very, very simple. Very, very simple. So if I cancel one, this one will cancel itself. Now, if one gets executed, the other one will cancel itself. That is how OCO order works. That's how it works. It's very, very simple. So if I come here now and cancel one, this one will cancel itself. If I go here and cancel itself, the two will cancel one another. Reason being that they are dependent on each other. They are dependent on each other. That's very important. Now, that is the different types of orders that we have in the cryptocurrency market. Now, order book and trade book. Now, the order book refers to an electronic list of buy and sell orders for a specific security or financial instrument organized by price. So, if you go to the Binance Exchange, this is called the order book. The red ones are sellers. The green ones are buyers. Now, when the price is reached, it will go to what we call trade book. That means when a buyer here match with the price of a seller here, it will go to the order book. So in the trade book here, you see mixture of red and green prices. Red and green prices, it means the orders of buyers and sellers that are being filled or executed from the order book. Like I said, the red ones are sellers, while the green ones are buyers. And if you look at it very well, they are organized by price. If you look at from here, sellers, it start to decrease. Okay? From here up, it start to increase. So this is the best price. This price here increase. If you look at buyer here, this is the best buyer because this is the highest price for the buy at this very point. And we're looking at, remember, BTC USDT pair. So this is the best buy. If you look at the buy here, it goes down. The prices goes down. So it is organized by price according to the quantity in which different traders place their orders in the market. So remember, when you place a market order, it does not go into the order book because it is an instant execution in the market. So it won't go to the order book. The only orders you see in the order book are limit orders. They are limit orders. And remember, stop limit and OCO are part of limit orders as well. They are part of limit orders as well. So limit orders are the only order you place in, you can see in the order book. And when you place an order with limit order and it goes to the order book, you are called a market maker. Now, when you use a market order and collect liquidity from the market, that is, you just buy, we call you a market taker. You are collecting liquidity from the market. That's why on some exchange, you pay, taker fee. You call it taker fee. There are some exchange you go, you see taker fee. And you have to pay for taker fee for collecting liquidity from the order book. So I believe you understand what order book is and trade book. Very, very important. Don't forget that. Now, how to deposit and withdraw on Binance. Now, when you want to deposit, it's very important that you should have completed your KYC. Ensure you complete your KYC. Very important. Ensure you complete your KYC. So you have to, do your KYC and ensure everything is in place. Ensure everything is in place. So you go to your identity and ensure you complete your KYC. Now, after you complete your KYC, you can then deposit. Now, for those of us in Nigeria, due to I think last month or last 2 months, we have a CBN ban on direct deposits on any cryptocurrency exchange. So what you do is that you always buy from individual, or you go to any P2P platform. We have an escrow. that you can buy and sell your Bitcoin, USDT, and the rest of them. That is very, very secure. So we are going to share the link also in the various groups and also in the description of this video. You join the escrow and you can buy securely. Now, another thing is that when you want to make transfer or deposit, you don't make mistake. Now, if you make mistake of, let's say for example, you want to deposit into this account, you can go to deposit. You go to deposit. Now, when you go to deposit, ensure you copy the right address to the person. Ensure you copy the right address. So you go to deposit. Now you can choose. You see, this is suspended for Nigeria. That's direct bank transfer. So you click on crypto. Now once you click on crypto, you have to search for the coin. You have to search for the coin. So if I want to I want someone to send me USDT, I have to go to USDT Theta, and then I have to choose the network. Ensure the person tell you the network he is using. But among all these networks, the one with the lowest fee is the Binance Smart Chain, which is the BEP20. If you use this one to send me USDT with the same network from your own end, I will receive it right here. I'm going to receive it. I'm going to receive the coin immediately with this network. Now, if someone sends you an address, let's say for example, someone sends you BEP20 and you use the TRC20 to send it, that's when you want to withdraw from your own account. The transaction or the money will be lost. But I think Binance have developed another way to recover your lost fund as a result of mixed network transfer. But that is a very tedious one. I don't think you want to pass through that kind of processes. But ensure you use the right address with the right network when sending and receiving your coin. I hope that is very, very clear. That's very, very clear. Now, when you want to withdraw, the same thing. So if I want to withdraw, I have to also specify the coin that I want to withdraw in. And then, so if I go here, if I click, I want to withdraw BNB or any other coin, let's say USDT. I want to withdraw USDT, the same thing. Now, the recipient address, the network have to be specified. You see the different charges for network. You see the ERC20 network is about $20 for fee. You see the Binance Smart Chain, the BEP2 is $1. While this one is 0.80 cents, which is low. Now, another low transaction fee here is the Tron chain, which is the TRC20 network, which also charge $1 as well. So you have to ensure the person send you the right network so that you send the person correspondingly so that you don't get your phone missing. Now, another way you can also get phone is by trading. Like, let's say for example, you want to, deposit in your Binance account. You can, go to the P2P exchange, still on Binance, where you do your P2P trading. Now, on my YouTube channel, I do a video on how to trade on P2P exchange, on P2P platform on Binance. So you can check that video out. You just type Remit Trade on YouTube and my channel will come up, and you search for that very particular video that talk about how to trade on Binance P2P. Now remember, still on Binance P2P, you can take it as a business for yourself. In recent time, with the disruptive technology that the blockchain technology have, no one in this world that have come to test the knowledge about the cryptocurrency space should not beg you for money. In fact, in recent time, if you beg me for money and I just ask you, have you heard of cryptocurrency before? And you say yes. I said, what have you done about the information you had? And you said nothing. It means maybe you may seem as a lazy person to some extent, because there are a lot of things you can do on this very exchange and on all other exchanges that will make you a whole lot of money, even though you're not trading. Like, people are making good sum of money from just P2P platform, buying and selling cryptocurrencies. Guys, check that out on my channel. I don't have much time. Okay, So that is that when you want to, deposit and withdraw. And also you can use your P2P account. Now, let me move a little bit further. Now, let me go into the real deal. Let me go into a little bit of analysis. If you go through my channel, there are a lot of analysis I've done before. For example, I just did one on Binance a bit last week, and you see how Binance coin have skyrocketed from about $250, and now it's 400 something. So if you have taken advantage of that analysis, or you were in our VIP signal group where I give such signal, I tell you, you would have seen a whole lot of gain in that very particular, coin that you buy. Now, I trade Forex, and I tell people, Forex trading is good, but cryptocurrencies is a little bit simpler, that it will give you an edge. Remember, if you lose in Forex, if you are losing in Forex, you're losing your phone. But in cryptocurrency, when you're losing, you're not losing the quantity, you're only losing the value of that very particular cryptocurrency coin that you buy. So you can hold it and leave it if the market is against you, and it will turn into profit later. All you need to do if you are investing is to ensure that you buy at the best possible dip, or use your strategy carefully, or follow your strategy carefully. All this will help you very well. So let's dive into a little bit of analysis, and then I will give time for question and answer. Ensure you pack all your questions, because I'm going to answer them by the grace of God. So now we have types of analysis and charts. We have technical analysis and fundamental analysis. These are the two main types of analysis we have in cryptocurrency. Now, in Forex, we can add another one called sentimental analysis, where we do some market sentiment and see what other traders are talking about, or how other traders are viewing a particular Forex pair. In cryptocurrency, we have only two that is very specific, technical and fundamental. Now, when we talk about technical analysis, you are looking at your charts, you're looking at your candlesticks. So if you go here, go to advanced, you're looking at your candlesticks. So you're looking at your candlestick, and this is what we call the candlestick. What you are seeing right here is your candlestick. So let me put it on full screen so that you see it very well. Now, this is what we call candlesticks. What you're seeing in your chart here is candlesticks. So if you should know how to trade very well, you must know how to understand these things. And that is what I'm going to show you in a moment. That's what I'm going to show you in a moment. Very brief, very brief. So in technical analysis, you're using your candlestick chart to tell what will happen before, using historical price action. That means you are using what has happened before on your chart, which is the history here on the candlestick on your chart. You're using that to determine what will happen before. Now, you can also use all these too. For example, we have what they call the trend line here. We have the Fibonacci retracement and the extension level right here. So if I can go here and click my Fibonacci levels, and I will use this to analyze the markets. That is all you do using technical analysis. Now, in fundamental analysis, you are not actually, looking at your chart to determine what a coin would do in the next maybe hour or day or weeks or months. You are using news or what the founder or the team behind the coin is saying. Let's say, for example, Bitcoin. Now, if you want to do a little bit of fundamental about Bitcoin, there are things you look out for. Number one, you look at the trading volume. Let's say, for example, here on Binance, if I go back, then if you see the trading volume, you use the trading volume to determine whether Bitcoin will go up or go down. Now, in my advanced class I took today around 1 p.m. Nigerian time, I was teaching them order flow, which is a little bit of advanced when it comes to analysis. There are a whole lot of things that you need to learn for success. This is not enough. Never, never is not enough. So you look at the trading volume. Another thing you look out for if you want to determine whether Bitcoin will go up is what they call the hash rate. The higher the hash rate, the more likely, like 90%, that Bitcoin is going to go up. Another thing is Bitcoin halving. After every 4 years, you have what we call Bitcoin halving. That means it halves the reward of miners. If you want to know more about halving, also check in the description below. I will give a link, or you go to the channel and search for that as well. So these two things help traders to know whether Bitcoin will go up or come down. I talk about the volume, the hash rates, and the last one, the number of addresses. So that is fundamental. So fundamental, you're not actually looking at your chart. No, you're not actually looking at your chart. You're looking at any other thing aside your chart to determine whether a particular cryptocurrency coin is going to go up or down. So that is analysis. Now, chart. In recent time, that's when we have what we call candlestick charts. Now, the candlestick chart you are seeing here right now was developed by the Japanese rice trader in the 18th century. Okay, before, traders were using the line charts. And when you use the line charts, it's a little bit, it does not give you enough information. It doesn't give you enough information about your chart that when you use the line chart. Another one is the bar chart. For those of you that trade Forex, you understand what I'm talking about. Another one is the bar chart. Now, when you use the bar chart, it does not also give you enough information. But when the candlestick chart was developed, it gives you enough more information about what price, what buyer and seller are doing in the market. Now, you may ask, what are these information? Now, I may not have all the time to go through candlestick patterns like the Doji, the bullish engulfing pattern, bearish engulfing pattern, Rahami pattern, and all the tweezers and all that. I don't have that time to go into that right now. But there is something I want to show you that you're still going to use, even though I'm not going to go deeper. Now, technical indicators. Now, we have different types of technical indicators. Now, technical indicators are divided into two: lagging indicators and the leading indicators. Now, lagging indicators mean that they lag behind the market. That means they are not telling you what the market is doing right now. That is, they are telling you what the market has done already. Now, leading indicator are indicators that is telling you what the market is doing presently now. Now, you may say, okay, it will be better to follow a leading indicator, yes, but also know that lagging indicator also give some good, accurate prediction. And you must bear in mind that in trading, indicators are not the best, because if it was the best, or if it's the best, people would have made millions. So all indicators have its flaws. So therefore, when using an indicator, you must know the one you are using and develop a strategy for yourself and follow that strategy strictly. Follow that particular strategy strictly, so that it will help you. So one thing we advise, at least most of our students in the beginner course know that we advise people to use at least two indicators. Now, in our advanced course, you don't use indicator anymore. Because there are some advanced technique that you have to use instead of using indicator that is more precise and accurate. Not only that, there are other advanced technical analysis that you have to do aside using indicator, just normally looking at your charts. The way you're looking at this chart right now is different from the way I'm looking at it, because why? I have some level of expertise that you don't have. There are information that what you're seeing right now on your chart is telling me, which you are not aware of. Because what? I know how to read my charts, candlestick patterns, chart patterns, and I know the interpretation of what's going on here right now. Now, like I said earlier, we have leading indicator and lagging indicator. Leading indicator leads with the market. All indicator will tell you the future direction of the market. But there are ones that are telling you what they are doing right now. So we have a whole lot of them. So these are the ones that are common. We have the stochastic, we have the MACD. MACD means moving average, convergence, and divergence. We have the Bollinger Band, which was discovered by a man called John Bollinger in the 1980s. We have the SMA and the EMA, which is the simple moving average and the exponential moving average. And we have the last one here, the parabolic sag. The parabolic sag is also a nice indicator to use, and etc. So if you go to this very area on your chart, you go to this point, And if you search for any indicators, you see they are numerous. So you can't say you want to use all the indicators. I see some baby traders, they will cluster their chart with indicators. There is no reason, there is no room for that. Don't cluster your chart with indicators. Don't do that. One, maximum 2 indicators is okay for you to be successful in trading if you know the rudiments of trading very well. That's the most important thing. So these are indicators. Now I will be focusing on only stochastic, and here is where I will draw the curtain for tonight. But I'm going to show you a simple tip. Listen attentively. I'm going to show you a simple tip that you'll be using to trade. Follow the tip accurately, and you will see success. That's a guarantee. Now remember this is Remit Trade Academy. If you're in the training and you've not subscribed to our channel, we will appreciate after the training. Just search Remit Trade Academy, subscribe to the channel. We'll so much appreciate it. And then if you subscribe to the channel before, thank you very much. We also appreciate it. You're helping the community to grow. Thank you so much. Thank you. So stochastic, how to use the stochastic. So now in the stochastic, we have what we call the overbought region and the oversold region. So if I go to the Binance Exchange and then I go to indicator, that's technical indicator here at this point, and then I search for stochastic. You see the stochastic here. If I click on it, it will come up. Now I can as well go to formats, and then so I can increase the parameter for visibility. So for visibility, you see, okay, let me put this in here. Okay, so if you look at it very well, we have what we call the overbought and the oversold condition. Now from this point up is overbought. That is market has overbuy. Then from this point, that is 20 down, is oversold. From 80 to 100 is overbought. Now, what does it mean for a market to be overbought and oversold? What does it mean? What does it mean when we say market is overbought? Now, when we say market is overbought, when markets enter into this point, that's when the blue line and the red line enter into the 80% mark to 100. We say market has overbuy. That means buyers have been buying since, and that they will be tired soon, or they are tired right now, and that sellers will going to take control of the market. That's what it means. That means when market move from here up to this point, if you look at it, at this point was here on the chart. Now market was here. It start to move up. Now as it's moving up like this, it enter into overbought. That is a signal that very soon market is going to go right down, and you should be prepared to take your profit or leave the market right now. For market to come down, when it comes down again, you can then buy. Now, oversold means that market have been selling. That means sellers have been pushing the market right down. And very soon, buyers are going to take control of the market. That means market is going to go up. Now, if you look at it here at oversold, that is from 20 to 0. That is the oversold condition. Market move into oversold. As from this point, market was going down. Enter into oversold at this region, and then it's coming out. Now, once it's crossed the 20% line, you see this big candle here, where we talk about the bullish close and all those kind of stuff in the Remit Trade courses. Then at this point, you enter the trade. It means market is going to go up, because if you look at this point, market is coming out of oversold. Remember, at oversold, it means that sellers are tired, and that buyers are going to take control of the markets. And we see exactly the same thing at this very point. Same thing at this very point. Very clear. If you look at this very point, also oversold, market goes up. If you look at this very point, also oversold, market goes up. Very, very clear. Very, very clear. So that is the principle behind you using the stochastic indicator. That's a simple principle you can use to use the stochastic indicator. Now, what's the simple strategy I'm talking about that you can use to trade the stochastic? Now, listen attentively. Now, if you take a little bit of walkthrough, that is, if you do a kind of strategy testing, if you test your strategy and you walk down, you discover that if you take overbought, that's anytime market enter into oversold, you buy. Anytime market enter into overbought, you sell. You may not make profit. You may not make profit. That is why we've put together, Remit Trade Academy, we've put together a sound cryptocurrency courses, beginner course, advanced course, to both course and mentorship section at the lowest price possible for everyone to take, only for this very training, where you are going to pay a little fee, just a little fee, to get trained very well. Now, why am I talking about this? It's very important because this training does not give you everything. You can actually place a trade, like I said, that I've just shown you, and then you can do any other thing. But when it comes to technicality about reading your chart, you can't get it all in one class. And even though you go through my YouTube channel, everything, you cannot still get it. You can't. I guarantee you. You cannot still get it. You still need someone to follow. I'm not saying you must register with us maybe and get trained. No. What I'm saying is that ensure you get trained by someone, even if it's not Remit Trade Academy, to teach you very well about this thing, because this is the thing that determines whether market is going to go up. This way you know either a coin will go up or it will come down. And if you can analyze this thing very well, you will get the gist. Now, the simple strategy comes to play now. Now, the first thing you have to determine before you use this very indicator is the market structure. We talk about that all the time in our beginner class, the market structure. And there is a way you look at the market structure. There are things you will look out for you to know that the market is going up. Now, when you see the market is going up, it's a very clear indication that you should be buying, because it's a bull market. It's a bull market. Now, when you see that the market is going up, all you need to do is to ensure that you buy the asset when the stochastic is at oversold. I repeat again. In an uptrending market, you see market is going up. Pop up your stochastic on your chart. Don't change the parameter. Don't go to format and change the input. Don't change it. Leave it at default setting. Leave it at default setting. Except you're a professional trader and you want to impute your own very setting that work very well for you. No problem. But at this point, this line indicates the market is going up. Now, when the market enter into oversold at this point, this is where you should place your trade. Now, you don't just place your trade. Allow the indicator to go into the oversold condition. Now, as it's coming out, ensure it's above or slightly above the 20% line, with the red line below the green line. That is, the green line above the blue line above the red line. And the market is going up. That's when you place your trade. Now, another thing you have to look out for is the candlestick. Ensure you see a bullish move, a sort of a kind of bullish move in the candle. Like the candle have to give you a sign. Not that you see a candle like this. If you see a candle like this one, no, don't place your trade yet, even though it's coming out. You should see a bullish candle like this that indicate that, okay, buyers are coming into the market right now. That's when you have to place your trade. That's when you have to place your trade. Very, very simple and important. Now, if you place your trade here, where will be your stop loss? Very important. Now, in Remit Trade Academy, we advise you use 1-to-1 at least. Now, the indicator that can help you determine where to place your stop loss is the Fibonacci levels, which I can go through right now. So if I pop up the Fibonacci here, if I click on this point and draw the Fibonacci upside to this point, I have already seen where to place my stop loss. So my stop loss here will be at this very point. That's the next support. This is my stop loss. Why I enter at this point. Now my target will be determined when the market come into oversold here, number one. So I can take this point. This is where the market enter into overbought at this point. So I can take this very level as my first target, or I can still use the Fibonacci extension. Now, don't get confused. I'm not teaching you how to use Fibonacci and all that. If you opt into our beginner class, which will be a very low fee, and I will give the price in the various WhatsApp group. And then if you're watching the video on YouTube, you just contact the Remit contact in the description, and I'll also give you the price as well. Very little fee, and you can afford it. We bring it down for everyone to afford it and get a good training on this very cryptocurrency trading. So if I, from swing low to swing high and back to swing low. So this is my first profit target. This is my first profit target, which the market did. So if I'm entering here, this is my stop loss, which you use your stop limit order to do, or you can use your OCO to set your stop loss and your take profit target at the same time, and everything will work perfectly well for you. Now, this is another point of entry. Now, if you miss out on that very particular entry, this is another point to enter the market as well. This very area where the market go down and enter into the oversold region. Now, when it's coming out of oversold, you look at this very point. If it's coming out of oversold region, about crossing the 20% line, and the green line have to be on top of the red line, market is going up. Not only that, if you look at the chart, you see a little bit of momentum in this very bullish candle. Momentum in this very bullish candle indicate that the market is going to go up. Now, you're not going to enter when the candle is forming. Remember, I'm on the 1 day chart. Now, you are going to enter at the close of the candle. Now, something to note, write it down. Ensure your candle closes. Ensure the candle closes before you enter your trade. Even if you're using a 1 day chart, 1 hour chart, 4 hour chart, 15-minute chart, it does not mean. Ensure your candle closed before you enter your trade. Now, let's look at some other stuff together with what we see on our chart. So that's the simple story. Now, there are some trader psychological mistakes that traders make in the market. Number one, we have FOMO, which is fear of missing out. Let's say, for example, you want to enter this trade. You have a good strategy, and you've already seen this market at this very level. At this very level. Your mind is telling you to buy, another one is telling you to sell, another one is telling you to wait. All of a sudden, right before your eyes, the market gets to this point. Now, you now enter at this very point, this very price. Because of what? FOMO. The reason is, where were you when the market was here? And you're not entering here. Now, one thing about FOMO, that fear that, oh, is going up right now. Let's say, assuming you did not see what price is going to do next. So at this point, price is going up. You say that price is going up. Not minding that, or remembering that my price has been going up for a long time. Now, anytime you enter with FOMO, most time, it will go down against you, and you begin to cry. Don't FOMO trade. There are, steps you need to take, which will also show you in the beginner course, which will help you avoid FOMO. Now, what we call revenge trading. Revenge trading talks about, let's say, for example, you use $100 to take a trade, and you lost 40. Immediately you lost on that trade, you immediately go back and place another trade with the mind of, getting that very loss back. You don't do that in the market, because the market have a way to trick you out and ensure you lose again. So when you lose on the trade, the solution is that you accept losses. So in trading game, you accept losses and ensure you move on. Now, if loss is very painful, first of all, close your PC or walk away from your phone and take a walk, or take a chill water and cool yourself and come back again, and ensure you check why you lose. Ensure you keep your strategy in place before you place the next trade. So don't revenge trade because you lose on a particular trade. Don't revenge trade. Don't do it. It's always very bad. The last one is the gambler's fallacy. Now, there is no gambler in this world that will tell you will not win on a bet. They will always have this winning mentality, and they never win. That's it. They never win. Especially if you see those people that play either is it Naira bet or Nigeria bet or all that. You will see them with a very long sleep, and they never win. And if they win, it's just 1 out of 10. That winning mindset. They don't take their bet in terms of probability. Now, in trading, don't see all trade that you are taking as a must-win trade. No. Look at it in terms of probability. Even though you have a strategy that works 80 to 90% of the time, that's okay. That's good. No problem. But still look at all trade in terms of probability, win and loss, so that when loss occur, it will be easy for you to accept it and ensure the next trade is a winning one. That's the right way to go. And all this talk about how we model your psychology very well, so that you have the right mindset towards the markets. You see some people that is telling you they are not making any gain in cryptocurrency. You see other people that have made millions. People have made millions. You go to their if they show you their wallet, I'm not talking about exchange. If you go to their wallet, I mean maybe Trust Wallet or MetaMask, millions are there from trading. We also have people that are complaining. It's because they are not following the right path. That's just it. So we have the gambler's fallacy and greed. You know, one thing about trading is when you take a trade, please ensure you have a target. Have a target for your trade. If you see this simple thing I just showed you, I have an entry, a target, and a stop loss. That if trade go against me, it should stop me out at that point, and I will exit the market. So that's very important. A good strategy, like I said earlier, should have a good entry, a stop loss, and a take profit target. Now, if you are investing also for a long time, let's say you're investing for 6 months, 3 months, or 1 year, you should also have a price target. You expect that assets to rise to before you sell half or sell all. So that's very, very important. So greed, when you take a trade and market hit your level, don't allow the market, let it go up first. Sometimes it will never go up again. It will just crash back down. And you never have that opportunity to take profit anymore. We see it happen in late 2017, 2018 when Bitcoin skyrocketed to $19,000. People did not take profit. They waited. They say it will hit 20, it will hit 21. Most of them don't have any clue about analysis or of the stuff. Bitcoin crashed to $3,000 or $3,000 something. So they have to wait till this year. I mean last year when Bitcoin rose past $19,000 for them to recover, or most of them might have, sell their assets in loss. So these are very important things you have to note when trading. Now, ordinary taking analysis is not enough. Having a good risk money management, which we also talk about in our course, there is a course that talk about risk and money management, and there's another one that talk about trading psychology, where we will model your psychology in the right path and ensure you take appropriate risks when trading. Now, if you're investing, you don't need to put any stop loss. Just ensure you buy at the deepest dip or the best available dip according to your analysis, and then just leave the rest for the market to do for you. That's all. Now, requirements for successful trading. Very important. Requirement for successful trading. If you want to be successful in trading, you have to apply all this. Initiative. When you come to this market, we have a lot of people that are smart in this market. You have to be smart with them for you to be in profit. If you are not smart with them, you will lose. That's just it. If you don't have enough information to read your chart, you will be buying high. A lot of people chat me, "Oh boss, I buy high." I say, "Sir, you don't have the technical know-how. That's why. Come and learn. Come and learn how to trade. Come and learn the technique. It's not hard. A novice can learn how to trade with just our simple tip. You will know how to trade very, very well. You know how to trade. I will personally be taking this very section after this class. Now, initiative. So you have to apply your initiative when trading. Now, discipline. You must be disciplined in trading. That's just it. You must be disciplined. You have to discipline yourself. If you don't see opportunity, just wait. When the market is at the peak, for example, if market is at the peak right here, please don't take trade again. It will definitely retrace. So when you see a parabolic move, this is what we call a parabolic move in the market. Market moves so parabolic to the upside. It won't remain like that. It will definitely come down. That is when it retraces. So at the point of retracement, there are things you look out for still yet to define or to clarify that this market will pause here before it goes up. And that is what we're going to be teaching you. Know the end of retracement, end of impulse, what you should be looking out for, how to position yourself, money management, risk management, trade psychology, some other stuff, other opportunities you can take advantage of in the cryptocurrency market will be unveiled to you in the beginner course, in as much as the advanced. And if you're taking our complete course in mentorship section, all of them, the price have been slashed down for you to take advantage of. For the very first time, we are slashing price in this very academy. The first time we are slashing price in this academy is this very time. So take advantage of it and ensure you participate in the training. And the training is going to start next week, Friday. Next week, Friday. So we give from now till Thursday, you make payments. Once you make payment, we add it to the group. And the training is going to be via Zoom. It's going to be a practical training like this via Zoom, and also the WhatsApp group for discussion. Not only that, you have access to signals where I'll be dropping signals so that as you are learning, you're also taking trade and you'll be in profit. All you need to do your KYC on Binance and then ensure you deposit, even though it's $20 or $50, and then get ready to trade as you are learning. Like I said earlier, the prices will be sent to the WhatsApp group. And then if you're watching the video on YouTube, because the video is recorded and I'll be uploading to YouTube, if you're watching it on YouTube and you want to actually know how to trade very well, if you're a novice in technical analysis and you want to know how to read your chart very well, ensure you check in the description below. You see a WhatsApp contact us or email us, and we will reach out to you and you get into class with us immediately. So these are the requirements that is needed for successful trading. So having said all this, the most important thing is when you use the stochastic, like I said earlier, ensure you define your trend. Define your trend, which what we talk about market structure. Every trader must do that before he or she must place a trade in the markets. Then when you define your trend, when the stochastic come back to the oversold region, about coming out, that's when you have to, that's when it's coming out and the green line on top of the red line crossing above the 20% mark, that's when you're placing your trade. And ensure you see a little bit of momentum in your candlestick. Now, this candlestick here can be a bullish engulfing pattern, it can be a closing price reversal candle, or you can have a little bit of bullish close, or a bullish harami pattern. Anyone that you see here, ensure there's a little bit of momentum. It can also be a tweezer. It can be a tweezer or a hammer formation before you see that bullish candle that is telling you to place your buy. That is when you will place your buy. And ensure before you place your buy, you might have known where your stop loss is and your take profit target is before you can now trigger your trade. If you are trading, you have to know that trading is different from investing. If you are investing, please don't put stop loss. Just wait for the market to dip right down, buy it at the possible dip, and allow price to go up. Wait for 3 months, 6 months, 1 year, depending on how you want to leave it, and market is going to go in your favor. That is for sure. So, having said all this, if you have questions, you can just briefly unmute yourself and ask your question while I answer questions one after the other.
Alright, good evening. I have a question.
You can be very fast about your question. Go ahead.
Alright. I'm just verifying my name. My question is Satoshi diagram the illustration you use. I think probably it works better with an uptrend trade.
You can ask a question again. I need a serene environment to hear you very well. You can unmute yourself and ask a question again.
Okay. I said I'm doing fine by then. So the Satoshi the illustration you used, I think probably it should work better with an uptrend trade. What of a downtrend trade? Like how do you differentiate your resistance and support when it comes to a trade that is going downward, not upward? Because there are some trades that moves downward. I don't know if you understand what I'm trying to say.
Okay, now I understand what you're trying to say. Now, this is very simple. Listen very attentively. I said you should only use this strategy when the market is going up. I did not talk about downtrend. Now, if you talk about downtrend, that means you want to trade futures, isn't it? That means you want to short the market, right?
Yes,
Now,
yes,
if you want to
yes,
short the
yes.
market, yes, if you want to short the market, it's still the same, principle. But now it has to be at overbought. So that at overbought, you short the market goes down, you be in profit. Also, you must define the market that the market is going down. You must be sure the market is going down. That's only when you short the market. In terms of futures trading and margin trading. The first one was on an uptrend, that is normal spot trading. I'm not talking about futures or margin trading here. No, I'm only specifying this particular strategy for spot. And if you want to trade futures, then you have to look for where the market is going down, and then the stochastic have to be in overbought. About coming out of overbought is a good point to short the market. It's a good point to short the market.
All right. Please coming to this overbought and oversold. I because the last time I watched your video, I tried it. I think few days ago. This overbought and oversold, I think, is quite different with time frame. Like if you go for a 15-minute time frame for overbought, you will see that probably the trade may be around 45%, and you go to 4 hours, you see that the trade is around 62. But whereas you advise when the stock is around 30, it's a good time to buy, and when it's above 70, it's a good time to sell. But if you use different time frame, you notice that maybe on the same trade though, you enter 15 minutes, it's 30, then you want to buy. If you enter 4 hours, you see that that 30 is in 62 in that spot. I don't know if you picture what I'm saying. So
Yeah,
does
I
that
get.
ROSI really work?
Yes, it works. Now, what you have to understand in trading is, most baby traders, they will jump and go and be taking trade on 15 minutes, 5 minutes, and all that. Please, I want to inform you of something very important. See, when you are starting trading, don't go and be trading on 5 minutes, 1 minute. You see a lot of noise there. The stochastic will be moving very fast and giving you a whole lot of false signs. A whole lot of false signs. That's where the confusion you're having is coming from. Because when you go to the 15 minutes, you see a lot of noise in the market. But if you go to 1 hour, 4 hour, 1 day, you will see less noise. But the opportunity that will come to you will be concrete. And you see less opportunity. That means if you take this very strategy on 1 hour, 4 hour, and 1 day, it will work well. Not 100%, because there is nothing like 100% in the market. No matter how professional you are, you cannot get 100% trade all the time. It's not true. It's not true. So the answer to that question is, one thing that makes the market somehow tedious is because of the time frames. Because if you go to 4-hour chart, 1-day chart, you'll be seeing different chart formation, but the same price. So therefore, you need a little bit of analysis. In the advanced of the what we call top-down analysis, momentum trading, demand supply level, trading with the DMI, all these stuffs are put together just for you to know how to actually analyze different time frames and know your candlestick patterns very well. You will do well. So ensure you use the 4-hour, 1 day, and minimum 1-hour chart when using this strategy to work very well. Not going to maybe 5-minute chart or 15-minute chart and maybe thinking it will work better. No. Little time frame, those smaller time frame give you a smaller opportunity, but there are a whole lot of noise that create false opportunity in the market. I don't know whether I've answered your question. The next person.
All right. Yeah.
Hello, good evening.
Good evening. Thank you very much. Yeah.
Yeah, please. You said you should look out for the blue line if it gets to like that oversold area. to be at the top, and then look for other reversal, strong concrete reversal indications from the candles. Now, if you're going to be shorting on futures, which of the lines are you looking to see above? Do you understand my question?
If you're trying to do what? Trade on futures?
Yeah, if you're shorting it on futures, which of the lines is going to be on top? Is it still going to be the blue line, or is it going to be the red line?
No, if you're shorting on futures, it means the red line will be on top of the blue line because the market is coming down. When it's coming out of overbought condition, ensure the market enter overbought condition. About coming down, the red line has to be on top of the blue line. That's when you short the market. So in this case, you're supposed to short the market here. Even the market goes up, don't panic. It will still come back down. These are another point. Since this blue line touched this very 80% mark, as the red line crossed over the blue one, it's another point to short the market around this level. So if you short the market here, you be in money. Now at this point, you don't short the market. Reason being that this does not enter into overbought condition. So you neglect these ones. Now, but in the advanced course, they will call momentum trading. So if you have a knowledge about momentum trading, you can actually take a trade here and here. Despite what your indicator is saying. That's why I said in the advanced course, you may not have to use an indicator when trading. You only look at what we call normal price action and take your trades. So in shorting the market, the red line have to be on top of the blue line. I think that answers your question, isn't it?
Yes, thank you very much.
All right, that's great. Thank you very much, and Precious. All right, any other question?
Hello, Mr. Paradise.
Yeah.
With this chart for BTC now, I don't know if I usually don't buy BTC.
Okay.
I prefer to go for other altcoins.
Okay.
But for me, I noticed with this bullish line, the bullish green line, the green candle.
Green candle, this one.
When I use that trick of using the green candle that has a tall one.
Okay.
When I use that trick to trade my trunks, I do trunks most of the time. Because right now I'm even hung on the trunks because my trunks the trunks is smoking. I don't know whatever trunks is taking now because I just have to chill now. So I noticed the green line does not usually fill up. It does not usually fill up when I try to use that bullish green line for my trade. Instead of it to go up, it will come down. Right now it has been coming down, and whenever the green bullish line comes up, it won't fill up before it comes down again. And so that's one thing I've noticed. I don't know if it was your video. I saw one indicator, that MCC or the MLL indicator. Like when the thing is tiny, you can buy because it means the market will soon go up. That trick does not usually work every time.
I don't understand the green line you're talking about. Is it the green candle or the green line? Which green line?
The green candle. Sorry, the green candle. Sorry.
All right. Now, see, one thing you have to understand is you have to analyze a chart very well. With your ordinary chart formation, like today I said I was having an advanced class with some students. That was 1:30 p.m. Nigerian time. Before then, we've analyzed this market, and I've already told them that if you watch my analysis on Bitcoin on the channel, you see this point, I've been looking at this point for long, even when the price was going up, and this point, I've already said this one will hold, and it's holding right now. Now, what I am looking out for on this very chart here right now, 1 day chart, BTC USDT pair is, if you see a breakout here, listen attentively, if you see a breakout here, and the breakout, it has to break in the sense that you have to see a bullish close. I don't know how you define your bullish close. Are you a student in Remit Trade Academy at all? Are you a student? Hello?
Yes. Hello, I'm not a student yet, but I'm open to.
Okay, see, just try and join us so that you understand certain things in the market. Like I said earlier, if you go through all my channel, all the videos on my channel, you will not know how to trade perfectly well. Not that I don't provide valuable information, but I don't give a full course like from up to down, like as it is in our course, our paid course. Some information, a lot of information on the channel are very useful. You can, if you've traded before, you can from there and be a professional trader. But if you've not traded before, you are just starting. it's not enough. You need other things which we can't cover in this very training. So on this very chart here, what I'm looking out for is a bullish close. So it should close above every other close here. It should close above every other close here. That's this my line, and give me a close, even if it's not above all the candle wick around this area. All the wick around this area.
Where exactly that your mouse is? Yes, don't drag that mouse.
Okay.
See that green, that small green.
Okay. This.
So that's what I'm trying to talk about. So when I see something like this, for me, maybe because I'm still a baby trader, I always think it would move up. See, like that.
Yes. See. One thing you have to note is this: do you allow the candle to close first, and which time frame are you looking at? Because you must allow the candle to close. Because if you allow this candle to close at this point, you would have seen that is down. So you would have not taken this trade at this point. And for reference purpose, I don't know why you want to take this trade here when the market is already at resistance. And market has been moving from here. According to the stochastic, if you look at the stochastic right here, market is coming up. Where were you when the market was coming up? And it is now you want to take your trade, you want to buy. Why? Yes, that's a problem. That's a problem. And your body won't tell you to wait. You will be, want to enter now. And immediately, immediately you enter, the market will go against you. That means your psychology needs to be right.
My trunk is on right now.
Yes. So what I was talking about here is what I am looking out for on Bitcoin is if it breaks out. Remember, I'm using 1-day chart. If it breaks out, it should close. That means the body of the candle should close above all the body here and probably all the wick. Even though it does not close above all the wick, but I want to see a bullish close above this resistance level. Once I see that, Bitcoin is going to go up. That's my own directional bias. You can check in the on the channel. I think I did a video about that some time ago, something like that.
Excuse me, wait. So when you see a closed chart like that, do you buy or you wait for it to go down?
No, when you see a bullish close here, I'm talking about it right here, is that you're not getting it. If you see a bullish close here, let's say this is a bullish close. And it close here. Now, two things will happen. Now, the first thing we'll look out for, which you don't know, is I'll go and check the trading volume, which is what we call order flow in advanced course. I'll go and check the volume of this. I may go and check the addresses. That is the fundamental now. Now, once the bullish close occur, markets can move parabolically up, or it will retrace and retest this resistance before it will go up. So, two things happen. You can enter immediately after the close. It means you're an aggressive trader. Immediately after the close of this candle, aggressive trading, or you will leave it to go up and retest the level before you enter conservatively. But each of these trading styles have disadvantage and advantage. One, if you want to trade aggressively immediately after here, sometimes the market can give you a fake out. It can just move parabolically and come back down. Or it will go up in your favor. Now, if you want to trade conservatively, sometimes the market don't retest. It doesn't retest. It just go up like that without retesting. So you will miss out on that opportunity. So it is advisable. Now, the reason why I would take a trade here is because this was not a dip in retracement. This was a consolidation. If you pop up the MACD, you will see a 0 to no momentum on the MACD lines or the MACD histogram, which means the market is gathering momentum, and when the momentum occurs on the bullish candle we want to see with a bullish close on D1, it means market is going to go up. That's what it means. So when you want to take your trade, please ensure you allow your candle to close first. Allow it to close. It does not matter the time frame you're looking at. Wait for it to close. When it closes, you cannot take your trade, depending on your analysis. Any other question? Any other question?
Yes, sir.
Yes, please. I have a question.
All right, go ahead.
Brother,
Go ahead. Yeah.
know that future is very risky to trade. So I don't really know how true it is. Future.
Features. Okay. Yes.
Very...
Yeah. Features is very risky to trade. That's correct. Reason being that it's a high risk environment, and you know that the cryptocurrency market itself is already volatile. That is risky already. So trading on feature as a beginner is a riskier game. That's true. It's a riskier game. But if you understand how to trade features very well, it means when market is coming down and you say market is going to come down, you will make money. When market is going up and you say market is going to go up, you make money as well. That's what features is. And you'll be using what we call leverage. If you look at Bitcoin here, you see 10x. These are leverages. These are leverages that you will use, or you will choose your own desired leverage when you want to trade features on Binance or on another platform. Leverage helps amplify your profit in as much as it also helps amplify your losses. That's what leverage does in trading. So features is very risky, my friend. It's true. Go ahead and ask your question.
Okay. Like I said, I'm a baby trader, and I'm looking to subscribe into your VIP. I think you have two groups like that. One for signal and the other one for training.
We have a general group and a VIP group. That's the two groups we have. Okay. A general group and a VIP group.
For me, I think it would make sense because I'm looking for money. It would make sense for me to go into the signal group first before I join your proper, what's it called? The other one,
the training.
So the trading. So I want to know if it is possible for me to make, let's say, 30% of my investment on, let's say, within three days or two days. Is it possible if I join the signal group?
Of how much in your account?
Okay. Let me say, okay.
Because you
personally, I want to invest. I want to start the investment with around 300,000 naira.
Yes, that's a good investment. That's a good one. You will make it.
I want to know if it's possible for me to be making at least
300,000 naira. At least that's just like 700 to around $700 or something, or $800 thereabouts. $700-800. Yeah, it's possible for you to make between. Let me give you a range between 20, 25, 30%. It's not a get quick rich scheme. I hope you know that.
I know. So I don't want to have that mindset that it's very sure.
No.
But I just want to have that mindset like, okay, if I'm not greedy and I'm disciplined, let me see, is it possible for me to be making, let's say, 20 to 30%
Yes. Any other question? The question that has been bothering you for a long time now. Bring it now.
How much is the mentorship class?
I will send everything on the group. On the group, you see it is in packages. It's in packages. That's 3 months, 6 months, and 1 year is in packages. The same thing to the courses, beginner course, advanced course, both course and mentorship. All of them are in packages. But for this very particular training, and for those in the WhatsApp group, the price has been slashed down for the very first time. So take advantage of it. I will give you the prices in the WhatsApp group. And if you are watching the video on YouTube after now, you can as well contact me via the WhatsApp contact in the description.
How many signals do you drop on a daily basis?
Okay. Now I drop 3 signals. Some days I don't drop signals. Some days I drop 3. Some days it's 1. But know that you'll be getting signal frequently. That's just the truth. So that when you join, and some days you don't get signal, you don't chat me up. Mr. Paradise, what's happening today? No get signal. Must you trade every day?
Okay.
Yeah.
I know. Okay. Then do you do for different coin or
different coins? Different? No. Different cryptocurrency. How will you get different cryptocurrency as far as Binance is concerned, and most of my signals always Binance signal. You can as well use those signals on other exchanges like Coinbase, KuCoin, GDAX, Bitrex, and Poloniex, and all that. Bitfinex, even Gemini, any of those exchanges, you can also use my signal on them. Any other question?
Yes, I have one more, please. If I'm not
your question is much. Go ahead.
Okay, sorry. I read something. I think you uploaded that video. I'm not sure if you're the one or one other lady like that. It's about that Binance Vault something. Binance Vault.
Okay, BNB VAT.
BNB Vault.
It's my channel.
Yeah. So, because I remember you said Binance would they will reward you with those new altcoins they list on their site. So I want to know, is it possible to, like the last one that was released yesterday night, this morning around 1 a.m. Alice, my neighbor Alice. So I want to know, let's say I have one BNB, like how much, like what's the quantity of Alice I can be giving with one BNB?
Okay,
That 30 days farming.
Okay, you see, Launchpad is going from BNB VAT because you are conflicting the whole stuff. Now, if you stake your BNB in BNB VAT aggregator, Binance will be giving you BNB every day, relating to the quantity of BNB you put in the VAT system. You're not trading, you're not doing anything. There are a whole lot of opportunities you can take advantage of on Binance. Just 3 days ago, I think you guys saw Toko Crypto that was on Launchpad that did 3,000%. We took advantage of it, and someone used $3 to get $3,000. Sorry, $300. Just $3 to get $300. These are opportunities that you don't know, but there are people that know how the thing works. Follow us and get a tip of it. Now, like I said, what you're talking about is farming. You have to put your BNB in farming process for you to have them Alice or any other one you're talking about. You have to farm. You have to farm the Alice. You have to farm it, and it should be within that. Some are always 30 days period. Some are 20 days period as well. So you have to farm it, and you have the reward at the end of the farming, which is what we call Launchpool. Launchpool on Binance is different from Launchpad.
So your student that used $3 to make 3,000,
$3
to make 300,
$3 to make 300. Participating in the Launchpad that just ended. Remember the price at presale is 0.01.
Yes.
0.01. That was the price, and it shoots to $10 for one. So you should just know what that means. Okay. The next person.
Hello.
Yeah, go ahead.
Hello, good evening.
Evening, thank you.
Yeah. All right, thank you for this lecture, please.
There's some problem.
Yeah, my question is, please can you go to your charts where the candlesticks are located. Now, you are on the daily charts,
yes,
which is the 24 hours daily charts.
1 day.
Yes, 1 day. Within that 1 day candlestick, there are a lot of things going on within that 1 day.
Thank you.
Like when you swap back to 4 hours, 1 hour, and thereabouts.
Okay.
You will see the prices are fluctuating.
Yes.
Before there will probably, each of these candlesticks represents a day.
Thank you for that's why for 1 day chart.
If you now go to the 4 hours or thereabouts, you will find out that within that 4 hours, which will be having about 6 or 8 candles or thereabouts, you could find out that either 2 or 3 or 4 or thereabouts within that bullish candle in the full day, they are bearish candles. You understand what I'm trying to say?
I'm getting you. I'm hearing you.
All right, good. Now, let's take for instance, you place a buy order at the beginning of the day. take for instance, you enter into your buy order by 0000.
Okay.
Maybe let's say 1 a.m. midnight.
Nigerian time, okay?
Yes, Nigeria time. You enter the trade 1 a.m. midnight, and then you have already forecasted and see that yes, it's gonna be a very buy order for the throughout the day. Okay. And at the end of the day, it was right, it was true. But you will find out that there are some hours within that 24 hours that were bearish, which your money actually lost. You've lost some bits within that trade.
Okay.
You understand?
Okay, I'm getting you.
So how do you maximize your profits within this time frame? If you are doing the 1 day trading, if you are doing the 4 hours trading, how do you maximize? How do you now know how do you know when to enter at the exact time and when to cut down losses?
All right. Is it Mr. Felix, right?
Yes.
You are a very funny guy. So you want to take advantage of all opportunities you see in the market. Let's say, for example, I put this chart right now on 1 hour chart, because what you are seeing on 1 day chart is different from what you will see on 1 day charts, like you rightly said. Okay. See, if you are trading on 1 hour chart, focus on 1 hour chart. Now, like I said earlier, in the advanced course, we talk about top-down analysis, where you do your analysis from 1 day, 4 hour, and 1 hour. It may be confused if you do it as a beginner. It will be confusing. But if you know certain things, it will not confuse you. You are only trying to ensure you enter at the right time, like you said. Now, remember, you're talking about how to maximize your profits. When market move up, come down, you take again, move up, come down, you take again, move up, come down, you take again. Now, I want to clear the notion that you cannot take advantage of all opportunities you see in the market. You can't take advantage of all opportunities you see in the market. No, you can't. So if you are taking your trade on 1 hour, 4 hour chart, focus on 4 hour chart and be taking your trade. The opportunity you see here should be enough for you. Don't go back on the 1 day, on the 1 hour chart to actually, you want to look at what is happening on 1 hour, that for you to take advantage of it again. No. If you are taking your trade on 1 hour, take your trade on 1 hour. If it's on 4 hour, take your trade on 4 hour. Opportunity you see there should be enough for you. After doing your analysis, if you're doing top down, that means, let's say for example, you're looking at 3 hours time frame to do your top down analysis. So you do from 1 day, 4 hour, and 1 hour.
Plug your.
You can then take your trade on 1 hour chart. So what I'm trying to say is that there is no how you will take advantage of all opportunities in the market. It's not possible. You can take advantage of the little you can, because there are a whole lot of opportunity on different charts, which you can't have the time to go through all.
Okay.
Yes. So just look at maybe 1-2 charts and take your trade and leave other opportunities to go.
Okay.
Yeah.
Okay, please. Another question, please.
All right.
Take for instance, you're trading on the 4 hour charts, and then you executed the buy limits option.
Okay.
And then you executed the buy limits option. It only gives the buy limits option only gives you the limit at which it should cut off your trade if the price is going down.
No, the buy limit, that's wrong. The buy limit, that's the buy stop limit, right? Or the buy limit.
Yeah, the buy stop limit.
The buy stop limit helps you to buy a particular asset. It's buy, it's not selling. It's buy.
Yeah,
you are buying. Yes, it's buy. Yes, you are buying. You are not selling.
Okay.
It's only when you sell.
No.
Yeah. You are buying a stop limit. If you use a stop limit and you use a buy option, you are buying after the condition, which is the trigger price, have been hit. Then the limit will be placed in the order book. That's a buy. Or if you are selling, it means you are already in possession of the asset. That means you can sell it as a stop loss. When you're already in possession of that asset and market is going against you, you can set a sell stop limit that can help you if you are losing. So you don't want to lose much. You can now set a sell stop limit that can help you sell your assets in little loss, depending on where you enter the trade and when you set your stop loss. That's how it works.
Okay.
Yes.
Okay. Now I think I got. Thank you for that, for making that clear.
All right.
The question I'm trying to ask is, you're using the stop loss.
Okay.
But you are actually buying. Take for an instance, where this very big candle is. Yes.
Okay.
Now I want to buy. Assuming I enter the market immediately, the red candle before the big green candle came up.
This one.
I enter the market, yes.
Okay.
Now I now set my stop limits. I'm buying, but
okay.
peradventure I really don't know what's going to happen in the next
next minute or hours. Okay. Yeah.
Yes, exactly. So now I put a stop limit against the bearish reversal. You understand?
Okay.
So maybe I put it at this point. What's that point?
This point.
556. Yes. Okay, let's just put it at that point. 55770. You understand?
Okay, go ahead.
I said, okay, if the market goes
against you
down, if it goes too down, please terminate the request.
Yes.
And revert my money back to my vote.
Yeah.
Now the market is being executed and is going to my favor. But for my analysis, because I didn't want to take too much of risk, I said stop buying at a particular point. Take for an instance 5750. You understand?
57 around here, right?
Yes. I said stop buy at that point. But the market is still going up. Is there any possibility of increasing it while you have already placed that order to increase this stop buy option?
Okay, this is don't call this a buy again. This is sell. Okay, you are actually selling because you're already in possession. You've already buy here. Market is going in your favor. You're in profit. So what you do here, you are selling. Now, if market is going against you and you are losing, you're actually selling again. Remember, all trade will be in USDT. You're selling your Bitcoin to USDT now. This is what happened here.
Yes.
Now, if market is going in your favor and you see that, okay, this market is going to go far way up, you can shift this one. When it has not executed, when price have not come to this level and get this thing executed, you can shift it up. But if price have come to this point and this thing is executed, my brother, is executed, you are out of that trade. What you can then do is to rebuy at this point for the market to go up again. There is no how that this thing will get executed and you then come back again and shift it. It's not possible. It's just like you went to the market to sell something at a particular price and you now come back and tell the buyer that no, that you want to increase the price now. That you should come and buy. Yes, that's
so
what
you mean just using your mouse to shift that point. It's going to be adjusted automatically from the order book.
It's going to be, it's going to be adjusted, or you go and cancel it and reset it. Two things: either you use your mouse and drag it, or you go to the order book and reset it. That means if price is going up and it's at this point, it has not hit here. You can go to the order book and cancel it and readjust this very price to this point. Where you think maybe you are seeing a very strong move, where you think the market will reach.
Yes.
Does that answer your question?
Yes.
All right, that's great.
So
that's great.
And then one last. Can I ask one last question?
Go ahead and ask.
Can you give a brief illustration on the ART? Is it ART indicator, something like that? It's some traders call it 32.8 indicator or something like that.
I'm not getting you. What are you saying?
ATR, the ATR indicator. there is an indicator called the ATR indicator.
The average true range. The average true range indicator.
Yes,
I can't
like
go into that right now because there's some time. There's some time.
Okay,
there's some time.
okay,
Yeah.
okay. All right. Thank you.
There's
Thank you
some
so
time.
much.
The average true range is some
Thank you.
time. Any other question
thank you
before
so
I end the session for today? Any other question? If you have your question, ask now before we end the class.
Yeah, good evening, sir.
Yeah, good evening. Go ahead, go ahead.
In your previous video you uploaded on YouTube, you discussed something about using trend lines. So I want to know, if you're using trend lines, do you draw from the tail of the candles, or it must touch the body of the candle itself?
Now, when you
oh God, this is mad question.
When you are drawing, when you are
actually the most intelligent
now, when you are drawing your trend lines, so when you are drawing the trend lines, you know, in your previous video you made mention of hitting the first two, then the third will be confirmation. Okay. So when drawing the trend lines now, should it be at the trend line, should it be at the wicks, like the tail, the tail of the candles, or it should touch the body of the candles itself?
Now, when you're drawing your trend line, let's say for example you want to draw your trend line here. Let's say you want to draw your trend line here. The first thing you look out for is the touches. Look out for your touch, the point of touch. Now, if you take from the body here, it can land on the body here. Remember, your trend line should not be considered as a particular point. It should be a zone. So it can be from your body here to your body here, and it will land on the tail here. It's still the same thing. It still touch it. It still touch, yes. Except you are drawing your Fibonacci, we will say, okay, draw from wick to wick or body to body.
Okay.
Not trend line. Remember, trend line, it have to have two touch, and the third one will validate the trend line before you can say the trend line is valid. And when it's maybe cross the line like down, the trend line is invalidated. Okay, so once you take your 2 points, it can be wick here, it can be body, but don't go and cross it like this. Don't go and cross it. It's wrong. It's wrong. Okay. Any other question?
Then, I also noticed that you can't really use trend lines on Android phones. I think it's only laptop.
Yes,
because on Android phones,
Binance
no
don't have
provision for that.
Binance don't have features for that for the moment on Android phone. It's only on your PC that you can do that.
Okay.
Yeah.
No problem. Thanks for the explanations.
All right, Q&A. Anyone? I think I've exhausted the time, and then I want to actually appreciate you guys for listening today's class training. Thank you very much for finding time to be here. We'll ensure we do our best. Please, if you've not subscribed to the channel, ensure you do that. Remit Trade channel, Remit Trade Academy, and we'll always provide you valuable information for free. And then, like I said earlier, if you want to know how to actually trade and take advantage of other opportunity that is in this space, in the cryptocurrency space, there is a whole lot. Presale, Launchpad, Launchpool, staking. Talk about them. To mention but a few, join us and take advantage of it, and you will see growth in your financial life. You will see growth. That's what I can say at the moment. So thank you very much. And then the prices for the course has been slashed right down, and I will update them on the various WhatsApp group that you find yourself. You see it, just make payments and you'll be added to the group. And the training for beginner class and advanced is going to start on Friday next week. So you have from now till Thursday to be part of us. Like I said earlier, if you're watching the video on YouTube right now, check in the description of the video. You will see the Remit WhatsApp contact, and contact us immediately, and also learn how to trade comfortably. There is no joy that you will get when you can comfortably on your own sit down from the comfort of your bed, not your home now. I mean from the comfort of your bed. Take trade and it enter, and you make money from there. That's what I do full time. So thank you very much, guys, for being with me here today.
Sorry to disrupt.
You said?
The 20%
20% discount when you said when we register.
Okay. Binance. Okay, if you complete, listen to this one very well. If you complete your KYC, right now, I am a confirmed affiliate with Binance. If you pass through my link and you complete your KYC and take a trade, number one, Binance is going to give you 20% off on every trade you place. That is, if you're supposed to pay a fee of $1, they will cut it 20%, you pay the rest. Now, you're going to get, I think it should be $5. Why they give me $6 for signing up. That's, you do your verification. That's KYC. Know your customer. Customer. Yeah. You have to do your, either through BVN or you submit your documents or some stuff like that.
Yeah, I've done all that. I've done all the registration, but I haven't started trading. I haven't even.
That means your account is verified, isn't it?
Deposited any amount. So, at what point do I get the 20%?
When you start trading, you have to take a trade. That's what I say. You have to take a trade.
That's fine. Thank you.
No, no problem. Yeah.
So, I'm actually based in UK, and I clicked your link to register. Is that all right, or is there any other Binance platform I'm supposed to use when I'm in UK?
No. In UK, you don't have issue. You don't have any issue with the UK. It's only US.
Oh.
Yeah.
Oh.
Yeah.
Fine. Thank you.
Yeah. All right. Any other question? All right. So thank you very much, guys, for being with me in today's video. Thank you. I really appreciate it. I love you all. Thank you very much. Do well to go through my channel over and over again sometime. I'll be uploading a whole lot of video that will help you,
Mr. Paradise, not go drop signal before you leave now. Just one.
I should drop signal.
Drop one before you leave. Drop just one. Just drop it.
Yeah, only guy. Thank you very much. I will drop. Thank you.
Okay.
There's no problem. Thank you, guys. I really appreciate you being here. So I end the video now. Thank you. Thank you for attending today's class. Thank you very much.